Hi friends, let's take a look at Ethereum. After I film this, I'm going to check and see I'm actually still recording my face. If I'm not and it's just audio only, then who gives a crap? Let's just see where we've come from, what we're doing, what we've got up to now. Okay, let's just zoom on in, get rid of all the crap off the chart and talk about things for a second or two. We said previously that 200 itself might have been the greedy profit taking zone. You know, it did actually hit 200 exactly and all the rest of it, 250, 200 $200.50, whatever, depending on your particular exchange. Though, you know, this was on BitMEX, maybe it got up to, maybe it was something else on another one. Shall we just check it out? Actually, hey, let's check it out. Screw it, never do this. Give me Coinbase. Okay, so where did we get on Coinbase? 200, almost 200 exactly, $200.06. Interesting. Anyway, what we were talking about here is how, you know, that was clearly be your non-greedy profit, that was slightly greedy profit taking compared to 199, 188, whatever. Who cares? These are tiny nominal differences. Afterwards, what we saw was a pullback of, you know, a good 5% down to 190, and then is that right? Yeah, the math's right there. Phew. And then afterwards, then we've seen us coming up here to these other areas where, you know, which is what I was saying if you're going to be greedy, then you might as well be kind of greedy up towards the 208, 209, 210, whatever areas, instead of being greedy just to 200 flat. So if you didn't sell there, held on to it down to 190 and then sold it up here, then fair enough, good on you. And if you haven't sold anything at all, I'm not financial advising, that's financial advice, then sure, what maybe you're looking at here is just saying higher highs, higher lows. We've got an upward trend. I'm a bull. I've got to do that until the end of the trend, yada yada. In which case, fair enough to you. And what you're looking at over here is that you've come above this resistance, and I guess you're looking up towards the next area is up here in the sort of 230 area and stuff like that, for where you could be seeing your next potential profit taking targets. Or maybe you're just in a perma bull and you want to hodl it, and you kind of kid yourself on about technical analysis and trading and all the rest of it, and you're actually an investor who thinks they're a trader but who actually just sits there, which is sometimes the curse that leads to people losing money. And of course, in markets which are bullish or whatever, it could just be the benefit. Who knows? You choose, you decide. What have we got overall on the go here is you could say that we've got some sort of wedgie type formation. You could also say we've got some sort of channel-y type formation. You can shove it on log and whatever and try and say, look, down here these candles are bigger than the ones up here as a result of it being log. You know, put it on linear, they look a wee bit more comparable, and therefore you could think that perhaps it's a bit more wedgy on the log thing, which of course it would be. That makes perfect sense, and that's how that works, by the way. But anyway, what have we got? We've got this death cross over here, and that's, you know, a bearish thing. And since the death cross happened, as so often happens, we've had the prices come back and test the 200 simple. In fact, move above the 200 simple even in itself. Now you'll find that inexperienced people in the world talk about death crosses and golden crosses as if they, in and of themselves, are like, you know, the keys to the kingdom, and you're off you go, way off, enjoy yourself. We're never seeing it again. More experienced traders, of course, know that you'd only really trade them after a retest of them, and that it so often does get at least one of the two bloody moving averages gets tested in the close enough time after the cross. Golden cross, test of 50 over here, for instance, test of 200, then actually crash through 200. You know, so we've got this here, we've got the death cross, we've done all this sort of chat in terms of testing it. We want to see how things pan out though in the next wee while. On the 1st of May, we're going to have the 50 simple moving average no longer have like this big drop down in price, and we'll be instead adding on a higher candle and taking off a lower candle every single time. At the minute, what we're doing is we're adding on a high candle here, but we're still taking off one of these higher candles and previous price action from where it was now, hence the downward slope. In fact, well, let's just kind of turn it around now as we see the price action, you know, right where we were before. Take it from, say, this candle here and go over to the current one, and you can see that's 51 bars. So the one that's getting removed is this one here, where the price currently is right now. Then the next candle getting added onto the average is over here, which will draw the price towards the upside. Cool, great, fine, whatever. But then in next week, what we're going to have is these candles being taken off and these ones being put on, blah blah blah. This will curve towards the upside, right? We've got the 21 is crossed above all the moving averages. That's good to see. We could have a golden cross, therefore, coming in the not too amazingly far away future in terms of the price action or whatever. You could, and all these things are fairly bullish. What could happen though in around the time of this cross, as we say, you know, as we've seen happen in the past in around crosses, which are significant golden crosses and things like this in the past is that it's no surprise that if I go on to then therefore say that in around these areas you could see the prices come in and retest again off those areas, and that would be something to be aware of. And I guess that's kind of the point, all I really want to make, and the point of this video for today overall. You know, and what have we got? We've got diminishing volume, sure we do. We've got a wedge type formation which is rising, sure we do. We've got previous highs that we're kind of just gone at, or this inflection point, it's not high, that we've gone above, which is cool, but this is actually like the previous high, you could say, which was a lower high. We really need to see the prices go above that 270 area to become actually, you know, big long-term fully bullish. Let's, you know, let's destroy this thing and whatever. We're going to go to the moon, get our moon boots out and our astronaut suits on, yada yada. But you know, first port of call obviously there, and then afterwards up there in terms of just looking towards these two things. But yeah, let's bring the oscillators up and see, you know, that we're still, you know, we're bullishly convergent across the across these three, the top three here, the RSI, stochastics, and the DMI down here. You can see that that's continued towards the upside, and down here in the MACD is bearishly divergent, as you would get with a rising wedge. You know, those things tie together. What do we have here in terms of just the sheer height of this of the stochastics? You know, that's worth bearing in mind as we come up to these areas, say 95, and look towards the left and ask when was the last times we were up at 95. Let's just sort of a quick brief look. Last time here was the 10th of February. The time before that was September the 16th or so. Let's take a look at the price action in the 10th of February or so. Well, up here, the 10th of February, that was a high and it went down. And what over here, what did we say? Something about September. Something in September, like around about the 19th of September, was it? Yeah, it was. And what was that? That was a high. What did we see following on from those two highs? What did we see? We saw 31% drop down in price. What did we see over here? This will be, I don't know, at least 5 or 6%, at least, you know. Oh my God, 69% drop down in price after that. So worth bearing in mind, sort of a thing over there, you could say. But overall, you know, we're convergent bullishly, overall, and you know, we're past this inflection point in the market. We're you know, we've gone above the 200 simple. The moving averages are spreading out in a bullish fan formation. Therefore, I invite you to tell me what you think is the outcome of those bits of technical analysis. I'm going to wrap it up at that, leave it at that for today. Like I said in the Bitcoin video, just trying to give you a sort of broad look at the market with some FOMO-free, greed-free, bias-free. As you, I hope I've come across as bias-free. I know I've said some things which could be considered to be quite bearish. But you know, does saying that we're in an upward trend, that the trend's a friend until the end of the trend, that we're above the 200 simple, which is a significant point, that we're above an inflection point in the market, that the things are bullishly convergent, that surely constitutes bullish chat, right? Likewise, that stuff I just said about stochastics and the 30% drop-offs, that surely constitutes bearish chat. I hope I've come across as being unbiased here, and let me know what you think in the comments down below. Looking forward to hearing what you're thinking, how you're trading this, and indeed watch the Bitcoin Chainlink and Tezos videos as well today. Like and subscribe. You've seen YouTube before. Let's grow this channel, and I hope that it fits into part of your sort of daily technical analysis routine. And it's great to make your acquaintance if you're new here. A friend of yours is a friend of mine, by the way, so share this video, and I'll catch you in the next episode. Cheerio.